All right. Good morning, everybody. Hey, good morning, everybody. All right. It's kind of quiet out there today, interesting enough. A lot of discussions about buying the dip. I say sell the rip, but, either one. The big argument right now is the discussion of, is this a dead cat bounce or not? And the only way to tell with 100% certainty is tomorrow after the market closes, not today. We'll never know for sure in the middle of a pullback if that pullback is actually a pullback or if it's a change in sentiment, right? There is no middle ground on trying to answer that question. In the overnight hours, the Asian headlines that I had seen said that this little push in the market was connected to the investors' perspective of Omicron and its impact on the marketplace. So we fell out on Monday because investors were concerned about Omicron and its impact in the market. But we rallied Monday night and into Tuesday morning because of their perspective on Omicron and its impact in the market. You can see how arbitrary and just straight up nuts that is. Yeah, and try to keep it as PG as possible. So today we do have the president speaking. He's going to be sending out free COVID tests he's going to have a scheduled speech, and he's going to be warning against the threat from the pandemic by those who are unvaccinated, right? Their language has changed in the last year from, oh, you poor unvaccinated people. Now the language is more, it's your fault if you kill your neighbor's kid because you weren't vaccinated and you got them sick. Horrible change in language, yet even with that, people who don't want the shot still aren't getting the shot, and that's their main push right now, is to get people to take their shot. So he'll be on TV today doing that. There is always the chance that when either the president or the Fed or Janet Yellen or any of those major people during a presser can say something off the cuff or out of hand, out of turn, and flip a market over. Not necessarily because they intended to, just by turn of phrase, right? So always be cognizant, be aware of when there are speakers, who those speakers are, and that way you can size back a little bit. Or if you are, watching the market unfold and you see random spikes in different directions, then you can kind of say, oh yeah, he's talking right now. Maybe it holds and maybe it doesn't. It's those big random spike candles in the middle of nowhere where you say, what the heck? What was that? Oh yeah, somebody's talking. Yeah. So there is the argument right now about buying the dip or selling the rip, and I think you could do both. In the current market, we have two-sided selling or two-sided trading, which is nice because when we don't have that and it's all selling or all buying, you really don't have a choice except to go with the crew. So in the current market, if you want to be a bear up. There are plenty of things that you can short, and if you want to be a bull, you can do that too. There's a smorgasbord for everybody. We do have some economic events on the calendar: 8:30, 8:55, 10 a.m., and 11 a.m. Now, generally speaking, maybe the 10 a.m. confidence flash, maybe. The president's not on here, so that's 2:30 today. Thinkorswim gets the information for those calendar events from Econo Day website. And for anybody who's about to ask, is that 2:30 Eastern, 2:30 Central? Is that 2:30 Apple time? We trade the market. We talk time using market time. I hear this every day. What would that be in my time zone? I don't know. I don't know where you live, and I don't care. You trade the same market I trade. You trade the same market Joe trades. So let's all talk about this market from the same time frame. The 9:30 open. I don't remember seeing Canada on that list. All right, so Canadian retail sales right here. This is going to be, this isn't US, this is Canada. And there is an additional bond auction today. It's not on here, but I guess it's not necessarily an additional auction. It's just they're selling the 20-year bond at 1 o'clock. All right, so I'll put that on the list too. A lot of those bond auctions don't even make the list, right? They don't even make the cut. All right, the white line you see at the bottom of this chart, that is the 100 period daily moving average. I've had some confusion about when I say that. So this is a daily chart, 1 year daily chart. That white line is a 100 period moving average. So if you was just to go in and turn on a simple moving average and set it on 100, you can see it matches up exactly where that other line is, right? It's just a 100 period daily moving average. The thing is, once we leave the daily chart, I still want to know where that 100 period daily moving average is. Right there. So Thinkorswim will allow you to plot a higher time frame moving average on a lower time frame chart. This is really useful for even just a heads up on the day. You know, are we going to hit something within our trading day? Look how the rally stopped here when the market hit the 20 period daily moving average and rejected off of it. Now, wouldn't you have really liked to know that there was a major moving average right over your head before you went to get into a trade and found out that this sucker couldn't get through the 20? Save you from taking a long that didn't work out. So we tested the 100 yesterday. You can see we didn't exactly hit it close enough to count. Down at the bottom here, we are asking how far away from the 10 period daily moving average is the market, and are we above it or below it? Now, the reason I use this is the markets, we're always trying to identify how far we have moved because of linear regression. Linear regression is in every part of the market. Did we move too far too fast, and are we going to revert back to the mean now, or are we going to complete the sine wave? To be able to answer that question, it often helps to understand how far away from the 10 we actually get on whatever market it is that we're looking at. Obviously, X steel would react differently than Tesla would to how far away from the 10 it gets. So each market deals with this situation differently. We can look at each market and ask the question, where does it usually turn around, pause, come back to the 10? If it gets past a -2, closer to a -3, that's about all you get before it starts to turn around and come back the other direction. That's to a downside move. Same thing to the upside. It seems to have a reversal zone around 1.8, 1.9. This is useful to know on a day where we're asking, is it going to be a rip your face off rally day? Does it have the juice to continue to move to the upside? Well, if we're already stretched to the average edge and the market is getting ready to open up at highs, it's really likely to be a stall day, a range day, or a reversal day, and we fade back off. It's unlikely to be a continuing rally day, right? So it's just a little perspective. This thing doesn't tell us to get in or get out or close trades or open new trades. Just offers a little bit of perspective on the day. Well, right now, we are still underneath the 10 and moving towards the 10 daily. And that's a good thing. It's like gravity or being pulled with magnets. So it's getting a little bit of an assist. But you can see we're underneath the 50-period daily moving average. That's a major, major moving average. It's a critical level. It is almost sideways, but it's still a critical level. So you're definitely going to want to know, hey, we're about to hit that thing. Yeah, have we made it through yet? No. How about now? Now? No. How about now? You're really going to want to know if we get through that thing, because if we do get through it, well, one, it becomes support. Two, you got the 20 next. So you're going to want to know if we have made it through. Can we lean on it on the other side? How far away from the 20 are we? These are important things to keep track of, because they can just wreck your entire plan, right? You go get into a trade, you bump against resistance, it all doesn't work out. So we are up 1%. We have an ADR. I don't even want to say it. I bet I'll just look instead of assuming that I know. We have an ADR of 1.8. Yeah, I was thinking it was less than that. See, I would have been wrong. So if we've already moved 1%, we still have the capacity to move another 0.82% and still be within normal boundaries. Now, we know a market can move way beyond normal boundaries, right? So when we're trying to decide how far this thing could go, just measuring the average boundaries would give us kind of a feel for what normal would look like. From our current location, if we was to add 1%, $46.50. That would put us right into this intraday high from Friday. Okay, I mean, that's easy enough to remember, right? A break to the downside would resolve this liquidity issue down here. The heck? We break that. We'll deal with the open of Globex, RTH high, RTH low. Giving back the 1% wouldn't even be an unreasonable move. Adding another 1% to that move, giving us a negative 1% on the day, would put us right around the COG line of 45.11. And again, that one's not hard to remember either, because there's serious issue at the COG line, right? So there's our range for the day. Should we maintain this bullish atmosphere, 46.50 is the upside target. And if everything starts to crumble and fall apart because of the economic news of the day that comes out, then the COG line at 45.11 will be the target. We will have to get through the 100 period daily moving average to get there, and that's a critical level to get through. You can see how it's been kind of holding up. And when we got through it last time, remember the market, it doesn't repeat, but it rhymes. You can kind of get a feel for what it looked like the last time we struggled with that 100. Now, a friend of mine shared this picture last night. That went into the sentiment when the market exploded at around 9:30, 9:15 last night. And if you go back just one day before, it said the exact same thing, only it was negative, right? And market falls 2% as investors assess Omicron risks. So, they went to sleep in a bad mood, woke up in a good mood. Bob's your uncle. So do we buy the rip? Do we buy the dip or sell the rip? This was one of those rip days. Bounced on the 50, right? We had a negative day, maintained the 50, kind of stabilized the next day. Then we had our rip day. And then it dumped again. It's another rip day, bounce on the 50. Strong, aggressive move up, got tangled in the 20, dumped again. A little bit of an argument for same thing there. So right now, we're not quite sure if we're going to get a muted day like this, where we stay, quote, inside day from yesterday's range, or if we're going to get one of these. One of those could be a 2% move, right? Let's see what this one was. 3.5% move. That's a significant move in the Nasdaq. Remember that day. That would put us at 16.2. All right, so the first piece of business on the Nasdaq is going to be that we need to resolve this Globex high. If we manage to do that, and we're already up 1.25%, the Nasdaq has a 2.4 ADR at the moment, meaning we can still move another 1.2%, and it would be considered normal, right? Just take the move that we've already had this morning and double it, and that would still be normal, right? So a resolution of the Globex pivot, then we will focus on Friday's high if we can get through that 50 period moving average. And you can see we tried back here to get through that 50. It didn't work out, no, right? We couldn't get through there. So now it's kind of, can we try it again? Are we there yet? So we're going to need to resolve that 50. If we get through it, we got to deal with Friday's high. That's the cake right there. I really can't see that we're going to have more than that without some fireworks in the market. And you will see that, right? It won't be subtle. It's not going to be a slow grind into that location. It's going to be like all rockets firing, tech running, finance running, energy's moving, one of those days, right? It won't be subtle. If we go above that 50, it won't be subtle. So let's flip it over and say, well, okay, well, what happens if we go the other direction? We will resolve the current Globex pivot right around that 715 range, go through the roundy, deal with the close. From the close, we'll deal with the RTH high. They're very close together, so I didn't bother to draw two lines there. The Globex high ties in with this, all this stuff back here. Then we'll deal with the low of yesterday. Now you can use the Globex low of yesterday or the RTH low of yesterday. They're so close together it won't matter, right? We get that nasty, it's going to be nasty. We're going to be resolving that issue. There is liquidity down there, right? So in this move that we started to see last night, where the market just woke up and started to stretch, we didn't see anything in the bonds. We didn't see anything in the dollar. That was a little bit of oddity from last night. And I was in the office doing work, so I seen it starting to unfold. Didn't have the why behind it, right? Like, wow, that's an interesting move. Where'd that come from? Without the why, you really got to, be cautious on wanting to participate in the move, right? It's that big candle right there. And there was just no rhyme or reason to it at the time, other than we had crossed the 10 a.m. or the 10 p.m. off of that low. So 10 o'clock came and we rallied up off of that low, and then some real fuel got spilled on the fire and the rip came. And then it kind of faded out a little bit. We did have a move in the kill zone last night. If you mark between 2 and 4, that would be the fade to the downside. And then we have now finally recovered from the kill zone. We're back to where we started before that announcement came out, before the kill zone began. Basically just hit the reset button on that little move. But there was nothing in the bonds last night. We are starting to get a little bit of a fade off this morning. We finally broke ledge to the downside. Beautiful little Busby right there. When we get a little perspective on the bonds here, we're at a critical level at these lows. And I mean, yeah, we've gone a little lower, but it's getting into that spot where we really want to see it stabilize. We don't want to see it continue to make these moves to the downside. And considering where we started, on Sunday night, Monday, however you want to say it, to where we are now, that's a significant move in the bonds. It needs to hold up here, right? So be watching this through the day. Gentle grind in any direction is fine. We don't want to see big, exaggerated moves, right? That ought to make you pause, step back, take profit, right? Start looking around and asking why, what the heck's going on. If it's just the grind, just the ease, should be all right. We shouldn't see too much conflict from that. The same thing with the dollar, right? So you can see the dollar is still maintaining that range. We just take it out a little bit bigger for a moment. The range is very clear when we come out here. So we kind of deflected off of the top of the range, fading off. The question is, are we going to retag those lows or retest against the top again? As long as we're maintaining in this range without too big of an exaggerated move, we should be all right. But that's the thing. We don't want to see situations like this, right? Or situations like that. Extreme moves in the dollar or the bonds should cause you concern, even if you don't quite know what it means, right? Oh, it's rallying. Is the ES going to fall, or is the ES going to rise? Maybe we can't always answer that question because we don't always know, right? It's not a perfect correlated inverse market. They're not teeter-totters. When one goes up, the other one doesn't immediately go down. So we don't always know what this might mean for us on the day. But the fact that it's beginning to make an exaggerated move, a big blowout play, something like that, that's enough to be able to cause you concern. All right, we got green on the screen in the sectors. Emerging markets are even up 1% this morning. Everything looks good, right? Everything's got a little bit of play to it. For me, the defining characteristics begin at least 0.5%. So IYR and XLP, XLU, they don't quite fit, right? They haven't moved enough yet, but they're close. Well, utilities are close. Staples, it's not there yet, right? They got a ways to go. But a lot of these are looking really good. Be careful when the president comes out to speak. If he resolved this thing with the senator, he could say something that really galvanizes the market in a positive way. If he, reiterates a lot of his fears over the Omicron and COVID, that resurgence of, uncertainty from Monday can creep back in again. Because remember, the only reason we went down Monday is investors' perspective of Omicron impact, right? That was Monday. And then this morning, they assessed the same data and thought, oh, that's good data now. Well, they may reassess again this afternoon when the president is speaking. Airlines and cruise lines yesterday were interesting, and I would expect to see this uh, kind of follow through today. They're definitely on my radar. When we're in a situation like this at the end of the year, and we're dealing with a lot of funds that were really up on the year, and now they're not. Right? They kind of got whacked back on a couple of big names. A lot of institutions are looking to, and I heard the phrase again today. They're not bearish. How do they say this? They're not bearish. They're just not so bullish, right? So they're taking off profit off the table, and they're not going to go to cash. So they're taking profit off the table. They're going to rotate into something, but they're not bearish. They're just not as bullish. Love that, right? That's a great way to hedge your language without really saying anything. Look for that capital rotation, and it may be that they rotate into the really beat down sectors like airlines and cruise lines, casinos, resort hotels, things like that. There is more and more data about a pill form that will be able to do what the shot does without having to get a shot. And I think that a lot of people who have not had the shot yet either can't, and I know people who literally cannot get a shot, and there's nothing that they can do about it. The shot would kill them. Or there's people that are just straight up scared of needles and don't want the shot, but they would take a pill. So, the more people that we can get vaccinated in any form or any shape whatsoever would be a boon for forward growth, right? Because they're always talking about, why is the S&P still going up? Forward earnings projections. If McDonald's can prove that it can still sell hamburgers even during a virus, then McDonald's stock is going to stay steady and perhaps even go up from there, right? Forward projection of earnings. Strong earnings growth. Forward strong earnings growth projections. Airlines are expected to begin recovery, as we get the virus under control. The more we have the virus under control, the better off these companies are going to be. I'm not suggesting you run out and buy all these airlines, right? Or cruise lines or casinos. They're in debt, serious debt. And they have to pay a higher interest rate to borrow money because of that debt. Their rating is really low. And when we are swing trading, we want to swing trade things that have good forward earnings projections, strong fundamentals. The airlines are notorious for, bad money management. So take it with a little bit of a grain of salt. Tradable? Absolutely. Right? We come in, we get a trade, move on, Bob's your uncle. Now you can see the weekly expected move watch lists 1 and 2. Significant numbers here, right? Look at MU, 8.5%. That's awesome. Earnings yesterday must have been good. That does put us at the top of a price range, right? This collection here, there's a very ugly flag, is one way to think of it, but certainly a range. And as IBD would say, this is a buy zone. They are big fans of buy high, sell higher logic. Absolutely nothing wrong with that logic. It's just hard to get behind, right? Especially if you've always been a trend trader who buys on pullbacks, right? We buy low, sell high. If that's your style, swapping over to IBD is a little rough because they are momentum traders. So they buy high, sell higher. It's very uncomfortable. But MU fits that. Not quite sure what I'd be doing with Mara here. That's a serious gap up. I'm almost willing to try to find some cheap puts just to see what the risk reward would be, right? Like I'll throw $10 at that thing and see if this is just a pop before it continues that fall. Very likely we're going to tag the 10 first and then roll, but we got to let it play out. Looking for some red to green. A lot of the red to greens that I've been looking at this morning have a very large tail on the bottom. I don't want that tail. I want to see these red to greens closing in the lower portion of that red day. It's okay if I can't find one, but if I've got a list of 10 stocks that I'm looking at red to green, I'm going to aim for the ones that closed in the lower portion first. Nike had good news in the overnight hours, so it's getting a little bit of a bump, right? You see that earnings is on the table. It's worth hearing what they said that gave them that bump. See the EV markets are moving around a little bit. XPEV up 3.5%. A red to green also, right? The trigger on this one, we are right there. We'd be looking for an inside day breakout with a red to green on the daily. It's about the perfect setup. Another chip name, NVIDIA, also back above that 50. Not sure if it's going to keep it or not, but that would be my line in the sand for an opportunity. NVIDIA is one of those companies that can make an exaggerated move on the day. I think it's got an ADR of 7 right now. I was wrong. 6.3. Still, it's only up, 3.5%. So it could still move another 3%, and it wouldn't be considered an outsized move. Which means if you're looking to trade NVIDIA, you could go 3% out of the money and buy those calls. It'd be better than buying calls at the money. This thing is a little pricey. $800 calls. So, if you can go out of the money 3% and buy those calls at half price, yeah, you can get 2 of these for the price of that one. That's what I got for you guys. Have a good one, and I will see y'all tomorrow.